Hey everybody, Brant Phillips here, Real Estate Fundamentals. So today I've got Jacky on from NREIG, which stands for National Real Estate Insurance Group. Jacky, how are you doing?
I'm good. Thank you for having me. How are you today?
I'm doing great. I'm doing great. We're going to talk, guys. We're going to be, we're going to do a short little interview with Jacky to talk a little bit about NREIG. Now, insurance, I get it. It's not a sexy topic for you guys out there watching, looking to make a bunch of money and flip a bunch of houses and buy a bunch of rental properties. I get it, but the last thing that you want to do is build this big portfolio or do these incredible deals and lose it from one misstep, right? So part of creating success and creating wealth is taking action, doing, running a sustainable business model. That's part of it, but the other side of that is avoiding some of the pitfalls. And so we're going to talk a little bit about why, honestly, like NREIG is incredible. So we've had some really not so good experiences, to be honest, with some other insurance companies. I'm not going to mention names because honestly, like they're friends of mine. Um, but we had multiple problems over and over and over again with issues with billing, and issues with coverage lapses that was just ridiculous. And so I found you guys earlier this year, and like I'm like 100%. We are so happy. Me and my team are so happy with you guys because the
Cool.
interface that like we can go in, we can log in, see exactly like we can see what properties are insured, what properties are not insured. We can download a declaration page just like that, and you would think that that would be kind of standard with all insurance companies, but we had the most difficult time with some other companies just saying, hey, what properties are insured and what's not? What is our cost breakdown for each property? And they couldn't give it to us. They'd send us a lump sum for 50 something properties from all these different entities. And how are we supposed to build back partners and partnership? Ugh. So I was very frustrated when I came to you guys, and I've been really happy. So,
That's
um,
good.
so why don't I hush up here and let you do some talking? So, Jacky, you heard my little spiel, but what makes NREIG so great in your opinion?
Well, really, you kind of hit the nail on the head there about why we are the solution for real estate investors. We are able to insure an unlimited number of locations on one monthly reporting form. We are able to do so through multiple LLCs or ownership entities. We can do it through any phase of occupancy, so vacant, renovation, tenant occupied, or new construction policies, and we do it all on one monthly reporting form. So you don't have to worry about which of my properties is coming up for renewal this month or how many of them are coming up for renewal this month. Everything is on a month-to-month basis, and so you just pay for whatever coverage you're using that month that you need it. So we were developed for real estate investors to kind of be that solution because other carriers just are not as easy to use as we are.
It's true. You guys are dialed in. I'm already like I'm kind of just going over the top here, but it's true. Like so we've put 6 properties under contract in the last 2 weeks. Like it's a little form. We built out a template now. A VA does it. You guys send it, boom. And it's like that versus these other, people, and they're calling, they're texting, and it's like, we're calling them and texting them like 3 or 4 days later, and we still don't have it, and we need this for a closing. So I've been like really happy with the speed of things. Yeah, so your systems are dialed in. So let's talk about more like generically of it. Let's talk about just a quick conversation about insurance in general. So let's talk about the differences in coverage for a flip property, which really is, what is that? What are we talking about? Like, what is the vacant clause? What do
Mm-hmm.
investors need to know about that versus some of the differences with rental property coverages?
Okay. So when you are flipping locations, there are a couple of things to think about with insurance. First of all, does your policy have a minimum earned premium? Because you don't want to pay for a year's worth of coverage and then find out after a 4-month flip that you're not going to get all of your money back or even any of your money back in some cases if the premium was fully earned. So definitely something to think about there. Whereas with NREG, we are month to month, so we don't have any minimum earned premiums. As far as a vacancy clause, almost every single property carrier has a vacancy clause of some form. So it's not something that we don't have, but what our policies say is that after 60 days of a property being vacant, the carrier can choose to take away some coverages for theft, vandalism, and malicious mischief. But as long as you report it to us that the location is vacant, then we're usually able to work with you more. It's those times where it's reported as occupied and the client is paying as if it were occupied because there are different rates. And then we find out at claim time that it's been vacant for so long. That's kind of where the trouble comes in at claim. So as long as you make sure that everything is accurately reported to us, then we shouldn't have a problem at all. For rental properties, there's a ton of different coverages that you could consider. And what we really try to do at NREG is tailor the coverage to fit your needs. So do you need replacement cost, or can you self-insure a little bit and have actual cash value coverage? Is basic or special form correct for you in regards to what coverages you want to make sure are covered if a loss were to occur? But also for a rental property, a tenant occupied property, do you need loss of rents coverage? Do you need contents coverage if it were to be a vacation rental at any time? Do you need earthquake or earth movement coverage that we offer? Or we have a tenant protector plan, which is an alternative to renter's insurance that can give you coverage should the tenant be negligent and cause damage to your building. Equipment breakdown, flood coverage. There's all different kinds of coverage to consider, but not everyone wants them all, and some want everything. So we really work to tailor your coverage to fit your needs for your investment strategy.
Yeah, definitely. Yeah, but assuming you guys are writing a lot of Airbnb type of vacation rental policies these days.
It's kind of taken off.
So true or false question. Let's say theoretically one had a vacant flip property. If they were to habitate the dwelling for one night, would that restart the 60-day vacant clause?
Well, we don't do owner-occupied locations, at least at this time, and so the owner going and living in the property for one night doesn't really reset the vacancy clause, and it's kind of a way to try to trick the system, but no, really we would say as long as there's been no tenant or no lease in place for more than 60 days, then the vacancy clause is enforced.
So, for the record, false.
Yeah,
Thank you.
Yeah.
That helps me settle a bet. Little argument that I have. All right, so here's another thing, and so, we'll wrap this up in a minute, but so, a lot of people follow my channel know that we're buying mobile homes, we're buying mobile home parks. You guys are insuring all of our homes. Let's talk about general liability. Do you guys do that? I'm not even sure if you do or not.
Through our commercial department, we can do general liability for mobile home parks, but that is not something that we do on a month-to-month basis. So that would be a typical commercial liability policy.
Okay. Yeah, I just had that personal question because we just went under contract on another park here in the last few days, so we're going to be getting all those things kind of put together. Okay, what are some of the mistakes? Are there some typical mistakes that you see real estate investors make when it comes to their insurance, maybe on their selections, a lack of coverage, other than just like total lapse of coverage and not paying their bill? What are some things that you guys see maybe in the office that, are conversations like, geez, can you believe what this guy did, which is something like that?
Right. A couple of things come to mind. First of all, some investors choose to not have liability coverage on their properties, which that, in my opinion, and in NREIG's opinion, is far more dangerous than not having property coverage, because we all know a liability loss can turn into $1 million pretty quickly, and that would be a lot more detrimental to your business than losing a $150,000 building. Another thing to consider on your insurance policies is co-insurance and making sure that you're adequately insured. Our policies, as long as you insure to at least $50 a square foot, do not have any co-insurance on them. But a lot of commercial liability or commercial property policies do. And what that means is that at claim time, if the adjuster finds that you are not properly insured or insured up to 80%, if you have 80% co-insurance of the cost to rebuild that structure, your claim payout can be significantly diminished because of it. So making sure that if you do have co-insurance on your policy, that you are adequately insured against the replacement cost of the building is definitely something to look for.
Okay, we're gonna follow up after this interview to make sure I'm just verify my stuff. Yeah, and I've got other like umbrella policies and things like that, and we've got some other depending on which entity we're in general liability policy. But so, is that something you guys offer? Where is it per property with the general liability policy, or is that like corporately for an LLC, for example?
So NREIG offers liability coverage for the underlying policy at $1 million per occurrence with a $2 million aggregate per location. And so generally investors feel like that is adequate coverage to make sure that should something happen on one of their investment properties, that is sufficient. So making sure that that coverage is per location is pretty key. If you do have needs to have an umbrella policy, that is something that we can offer, and we hope to have an excess liability option on a month-to-month basis in the very near future. But if you buy a typical umbrella policy, that would be another $1 million or $2 million over your entire investment portfolio, not per property.
Okay, great. That's good information. Well, I really appreciate you coming on, Jacky, and sharing all this information. Guys, if you're interested in learning more about NREIG, NREG as Jacky calls it, I'll post a link below in the comments section. You can go to our resources page where I've got a lot of our preferred vendors, a lot of the companies that I specifically do business with. There's a link on there. You can call, click the link, fill out a quick form, and it's a real quick, easy process. Some of my students and just friends of mine who are investors have already made the switch. They clicked on the link, filled out some information, and everybody's happy so far. I haven't heard really any negative things, so I appreciate you, Jacky, for coming on, and I appreciate your team and all you guys are doing for us. And really, I appreciate you coming on.
Well, I appreciate you having me today, so thank you very much.
All right, thank you very much. Hey, guys, thanks for watching the show. Be sure to click on the comments, hit the like button, hit the subscribe button. If you want to learn more about NREIG, go to our resources page, see a link below, click on that. Give them a shot, give them an opportunity to gain your trust in your business. I'll tell you, we did. We've been very, very happy. So y'all take care. Hope you enjoyed the show.